I recently posted an article from Realtor.com that said the first week in October would be the best time to buy a home for the rest of the year. But that really is going to depend on interest rates. And if interest rates drop, will that help the market? Stay tuned to find out. Let's talk interest rates. Hi again, I'm Tom Mason with Coldwell Banker Realty, and we need to talk about interest rates because if the prediction by Realtor.com is to be true, then interest rates are going to have to drop in order for October 1st through the 7th to be the best time to buy a house this year. So you might be asking, how could interest rates go down if the Fed keeps raising the rates? The interest rates for mortgages are not based on what the Federal Reserve does, it's based on inflation. So as inflation goes down, the Treasury Department can lower the return on the 10-year Treasury, and that is the baseline for mortgage interest rates. So we have three examples of agencies that are predicting mortgage interest rates to go down, and it may be because they see inflation falling. Mortgage Bankers Association, National Association of Realtors, and Fannie Mae have each made predictions. Now, the Mortgage Bankers Association, they have a vested interest in having lower rates because they're lenders, basically. And if there's no business in the marketplace, what happens? Well, we've already seen some lenders are laying off loan officers and downsizing their companies because there's just not enough action out there to justify all the people that they have. There's not even refinances going on because interest rates are at 7.5%. And because of that, we may see that they have a little bit of an optimistic view on where interest rates are going to go. But by the end of this year, they're predicting that mortgage interest rates will drop to 6.3%. Much better than 7.5%, right? And they continue to see those interest rates dropping until the end of 2024 when they predict 5.4% for interest rates. Seems like good news, right? Let's take a look at the National Association of Realtors. National Association of Realtors see by the end of this year interest rates dropping to 6.3%, and they'll continue to hold steady according to NAR at about 6% at the end of 2024. So not quite as optimistic as the Mortgage Bankers Association, but here's one that's really a little bit pessimistic, and that's Fannie Mae. Now, Fannie Mae is a government-sponsored enterprise, and they handle a lot of loans. So when you originate a loan with your lender, a lot of times those end up being bought by Fannie Mae at the end. So now Fannie Mae, I think, is a little bit more realistic because they see by the end of 2023 mortgage interest rates being at 7.1%. And we can see we're at 7.5 today. We may see some dropping occur during this last quarter. If the stock market does well, if inflation stays low, definitely the 10-year Treasury could come down, which means the mortgage interest rates will drop as well. So while we look forward to a drop of interest rates, will that really help with home affordability? Then the answer is probably no. As Barbara Corcoran, you might have seen her on Shark Tank, points out, if interest rates drop significantly, then the price of housing is going to escalate because there'll be more buyers out there looking to buy a home, and so it'll create a stronger seller's market. And I tend to agree with that. I think that's probably the direction. We're seeing it now with the price of homes continuing to increase. Now, they're not skyrocketing at 20% per year, but if you look at 3% to 6%, depending on what part of the country you're in, we see prices going up now in a relatively bad real estate market. So is that positive news? There's only two ways that we can really, I think, get to home affordability again. Number one is when interest rates drop, if we have a ton of sellers get into the market, if there's pent-up demand for selling, people needing to move, people just going to upsize or downsize, and they really want to sell that home, if we get a lot of sellers in the marketplace, that may slow down that rise in price for homes. The other way to keep prices in check is if new home builders start putting out a bunch more homes. Now, this chart will show you that the new home builders, during the rise in 2021, we can see just exploding with the amount of new homes being built out there, but then they're leveling off at the top and really not making up for the deficit of housing. Still, 4 to 5 million homes short in the country. But are the new home builders focused on doing that? I'll show you where they're focused. This is a chart of multifamily homes. In other words, they're creating rentals. Multifamily properties, you can see the explosion in multifamily housing. that new home builders are getting themselves into right now, which means you'll be renting instead of owning. You won't build any equity, you won't build generational wealth. So how do we solve all this? Well, we know that politics drives a lot of what we do in the economy. And with real estate being such a large part of the economy, you have to go out there and really take a look at the politicians out there that are going to propose that affordable housing be built at a higher rate. How can they entice new home builders to get out there and do that? So in each of your jurisdictions, in each of your states, and nationally, who's going to help you in the long term by facilitating the production of new homes? That's going to be a key. We also have to keep in mind that there are other things that occur inside an economy that could impact new home building. Like in Arizona, for instance, do we have enough water to continue to build at the rate we've been building? If you have any questions about this data, you want to know more about it, if you just want to talk about real estate, please feel free to give me a call or an email and we'll chat it up a little bit.